This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil. I'm going to give you a stock market update. And through Thursday so far, we've got a down week in place. And I want to show you what kind of damage is being done, or if there's really any damage being done, and what shifts are taking place to the market conditions. We've had a few that are very important. And we need to distinguish in time frame as well. So we're going to go through that. We're going to look at the trend and momentum. I also want to use my special 18s chart and go through that. I haven't done that in a little while. I think it's worthwhile. All right. Now, before we get going, just let you know, if you have any interest in learning more about how to use MACD and ADX in multiple time frames, I would suggest starting with the book. Also, if you enjoy this content, please hit that like button and also subscribe. Okay, let's start out with the sentiment, which really didn't change much at all. I'm putting it at neutral. We don't really have any extremes right now. We're working off a pretty bullish signal that where people got way too bullish at the peak, and we're still in the process of kind of working that off. So it's very possible that it's still kind of acting as a negative right now, but it has worked down enough to be more like in the neutral camp. All right. And then the same thing holds true for the overbought, oversold oscillator. So I'm using the 5 RSI, and that's back to right about the 50 level. Okay. Now I'm going to go through the trend and momentum and the volatility in a second. So the volatility is still negative on the longer term weekly. On the daily, it is positive. It has switched to positive. All right. And then on the trend and momentum, for trend on the monthly and the weekly, we're positive, and on the daily, we're neutral. And then for momentum, currently have positive momentum only on the monthly right now. I'm going to show you why on the weekly and daily I have those at neutral at this point. All right. Now, I am using OmniBroker this week instead of stock charts. Stock charts does not, the 18s chart that I use, I can kind of create it with just doing the math, but I'm going to use OmniBroker for this just because it's going to actually overlay all the 18s on one time frame. I really like the use of that. But first, let's just look at what's taking place with the momentum. So we've got the average true range on the daily has rolled over in terms of the moving average. So I'm using an 18 of the 20 ATR, right? And that's this blue line, and that has turned back down. So that to me is a positive. All right. But the trend, we're kind of losing the trend a little bit. We drop down below the 40. We're kind of breaking these two lines. Or if we roll this over, we're sort of breaking this trend. So we've got to watch that pretty closely in the short term, because it does kind of play into how I look at the trend and the volatility. I like to look at them together. Right now, this is not the kind of, so we're getting a pullback that we're looking for, where this is getting oversold on a short-term basis, and we have low volatility. But look at how sloppy this is. This is not ideal in terms of the way it's played out. Now, still, if we can work our way up, and I think we probably, at a minimum, we need to get back up through 555 in the spider, which isn't quite the midpoint of this. Well, I guess it's right around the midpoint of that bar, but it's also these lows. You can see these lows on this daily bar. I think at a minimum, we got to get back through that, but we're going to keep an eye on the hourly. I'm going to go through that in a minute. Now, on the weekly, we've had a pretty good rally back to the highs, okay? But we didn't break to a new high. We basically kind of worked our way back up into this resistance area, and look at what the volatility is doing. You see the difference in the volatility here versus here? We still have significant volatility during this process. We're not seeing it quiet down. And typically, if you're going to start moving up again, the volatility will drop right off. It goes up and then it drops right off. And that's when you get these kind of surging moves. So if you notice, the volatility is staying high. I think that really increases the odds that we form some kind of a range. Now, first order of business is breaking the 18-week. Unless we break the 18-week, you still have to have an upward bias. We can have a high volatility period that keeps trending. Okay, it's just a very difficult period to make money. I think it's a whippy kind of price action, and it could be narrow potentially. But the point I'm making is that if we break the 18, Then we have high volatility and we've got an issue with the trend breaking the 18. Right? Then we have something to be a little bit more concerned about and probably form some kind of a range with this as initial support and then bigger support around this 5,000 mark on the S&P. S&P's 5,500 for the SPY. All right. So I'm watching this pretty closely because if we break the 18 and what the volatility is doing is a concern. I mean, this is, look, we got to look back and see that we had a phenomenal period where the volatility was low for an extended period. We had a nice trend to the upside, and there was really good money to be made. Right now, I think you got to be a lot more careful about putting money trades on, especially when you're looking at monthly, weekly type patterns. Now, I go into this in depth. I have a whole course on the third course is called the Trend and Volatility course, and it goes into all this information in depth. All right, now. So from a short-term standpoint, we could possibly get a pop because we're getting a little oversold with low volatility. We got to watch and see if it can at least get back up through that 555 mark, I think, at a minimum. All right. Now, I do want to switch over. And before I get into the trends, first thing I want to do is show you my 18s chart. All right. So here's what I've done. I've basically got a weekly chart here, and I've overlaid an 18-week in blue, an 18-month in green, an 18 quarterly chart in red, and then an 18-year chart is this dark, it's actually like a purple line. All right, so you can see what's taken place since the initial start of the bull market. Now, I know the bull market actually started earlier. I can go back and show you this. It started way back in 2009, but you can see where the trend truly kicked in was here. That's when we had all time frames in sync. Right here around 2011, 2012 is really where everything was working together, and you had the lowest risk opportunity to really play a new trend. That's where all the lines are together, and we haven't started to expand. From that point, notice how the quarterly started to move away, and it's never really come back to the yearly line. And we've had some periods where the 18 gets on the monthly, gets really far away from the quarterly, and then it comes back. We're not quite at that level where we've got the green line, this monthly line away from that, but we're getting there. We're starting to separate. But you can also see what's taken place with the weekly. You see how the weeklies had gotten far away from the monthly and for an extended period? We're doing sort of the same thing now. We've gotten away, the weekly line has gotten away from the monthly line, and it's been going on for, a decent amount of time. Now, it could go on a little bit longer potentially, but we want to recognize that I think in at least the way this trend is playing out, for this to start coming back towards the 18-month line, I don't think would be a surprise to me at all, just the way things are playing out. So we need to be aware of that. Now, it could do it in one of two ways. It could come down to it, and it could, it could break it and go back to the quarterly. I'm not sure that the market's ready to do that right now, just based on the overall momentum condition. But what it could do also is just go sideways and allow the 18-month to catch up. It doesn't have to come down to it. We just need time, either price or time, or it could be a combination of the two. We could come down maybe towards that 5,000 mark and it meets up with it there. So it's just something we want to start thinking about and watching. I do like having this chart. I'm referring to this chart periodically. So I wanted to bring that up. I hadn't done it in a little while. And you do want to understand, look, if you're looking to put money in ETFs and stuff like that, I mean, this is where you just load the boat. Right? And obviously you have other opportunities when you get down and you turn around at the quarterly line. Okay. Those are phenomenal longer term opportunities, not trading opportunities. And this is where I tell people, look, if you want to put money into a 401k or something like that and add to it, these are the periods where you want to get aggressive. Now you can certainly do that coming back to the 18-month as well. Just got to be really careful about, buying after extended runs in the market, or where even something like this, where you put it on where it keeps going, but in reality, it's losing momentum, right? So we just kind of want to be aware of where we are. And I try and take advantage of periods where we come back down and the sentiment gets really bearish. When you get that combination, if you come down to a rising quarterly line or a rising annual line, But in a bull market, you're not going to really get the annual line. You're only going to get to the quarterly one. When you get those, you want to take full advantage. If you have money that you're looking to put away, or you receive an inheritance, you have something like that. I mean, you want to really take advantage of these periods, especially if the sentiment has gotten incredibly bearish. All right. All right. So I want to go back now and just look at a few things related to the trend and momentum. Now, I know last week I did talk about the fact that we were going to close the month and we were going to close it pretty strong. But one thing I failed to point out is that we had kind of a questionable bar here. We have a big tail here. We're going to need to take out the high of these two bars to really show true continuation of this tail, right? I mean, this tail could be a sign that, sellers stepped in and then we rallied back up. If we kind of break the midpoint of this tail or this bar that has the tail on it, then I think you got to start thinking that we're going to come back down to support. So just something that I always like to refer to the bigger time frame monthly just to look at what the bars are doing and see if we can learn anything. But prior to this big tail bar, we did have indecision here. So we're kind of consolidating here. We don't have anything definitive at this point. So we've got to look at the momentum as we're moving up. So far, I think the momentum is okay, but I switched the momentum on the weekly to neutral. And the reason is that we had two different signals. We had reverse divergence. All right. But we also had in the short term, we had higher low, higher low, higher low, I mentioned last week, and the potential for a downward pinch. We triggered that. All right. Now, it doesn't mean it's going to follow through or it's going to fall apart or anything like that. But in the short term, I think we have to respect the fact that we had that little trigger. Now, countering that is the fact that the green has gotten back above the red so quickly. But if green doesn't hold and we come back down through 25, then we know that we're probably in some kind of an extended period where this is going to consolidate. So this is really something to keep a close eye on, is this we really just want to focus in if this green DI comes down through the 25 line and red comes back up and they crisscross again. But at the very least, if we get the green DI to come back down through 25, I would start to get a little concerned about the shorter term pattern and start to think that we're looking at some kind of a consolidation developing. Now, I still think the 18 week is incredibly important to watch. We can come down a little bit and have, a 1 or 2 bar drop and still respect the 18 on the weekly, maybe nick it a little bit, break below it slightly, something like that. But unless we really get through that line, we still have to have an upward bias. All right. And you can see it on the monthly. The momentum signs are still fine. The only issue we've got is that we're too far away from this 18-month. And if we can work our way back a little bit, obviously that would present a much better buying opportunity, I think. All right, let's take a quick look at the daily because, again, we were below the 40 for part of the day, but we have crossed, the MACD has crossed back down. And look at what took place. So we had this dynamic move to the upside and we were consolidating. I was totally fine with this. I was totally fine here. One thing I was looking for was kind of a breakout pattern that we get back above and green DI to make a higher high. That was one thing I really wanted to see that would really kind of confirm the short-term pattern is getting ready to make another little leg to the upside. Now, with what's taken place on the weekly and the volatility and everything, I don't know that I would have been looking for a lot of follow-through, but I was sort of expecting, based on how dynamic the move was to the upside and the fact that there were no sellers here, it seemed, at least based on the way the bars set up and the ADX set up, that we'd have maybe a little bit of follow through, but we're actually getting the follow through to the downside. And we created this big red bar. And I think the midpoint of that big red bar is pretty important. And as I've been saying, somewhere in that 555, maybe 557, something like that, I think is pretty critical. We're going to need to get back up through that. Now, even if we do, you can see that the MACD is a bit of an issue. So that's why I wanted to flip that back to neutral. And I'm not calling it negative because we don't really have the sellers here. It's not really negative, but it also isn't positive, right? I mean, we don't have the kind of pattern that we would want to look for to go diving in on some kind of a pullback or something. Finally, I do think I wanted to point this out. So if you look at what the spiders are doing, we do have enough negative DI to cause the ADX to get above 25, but it's not like going nuts. It's not doing like what was happening here to the upside. And the reason why I want you to understand is that we've had this drop, but then you get positive DI here, right? And then you get more positive DI here. And then you get a pretty big drop, and then you get more positive DI here. It makes it really hard for the ADX to go nuts to the upside when you're getting these counteracting moves along the way. When it's really powerful is when you don't have much DI. You got one little DI there, and then look at the gap up again, little DI here, and then continuation. So we want to be aware of that. The price action is determining how this is acting, right? You want to look at the bars and understand that. So yes, the trend is bearish. Yes, the trend has enough momentum to carry to the downside, but it's not so powerful that it's like there's just no way it could rally. I don't really see it like that. It's possible that we could turn here and not turn into something all that ugly. But we want to keep a pretty close eye on how this plays out because of what's taken place on the daily chart, the fact that we're below the 18-day, the fact that the MACD has crossed down through the signal line. All of these are somewhat concerning in the short term. So we just got to see what kind of reaction we get. And if buyers can step back in here and kind of neutralize things, maybe get this back up through, like I say, for the spider, somewhere around 555, 556, that'd be what I'd be keying on. On the bearish side, if we break down through the 18-week, then we know we're in for something that's going to take a lot longer. All right. But in either case, I think you got to be a lot more careful about new buying right now. All right. That's the update for the week. Let me know if you have any questions. Thanks.